What's going on, everybody? So we're going to have a look at a little lesson today. Each Friday, I'm going to post a short video just looking at the markets and giving you some little tips and hints that you can use to study over the weekend and look forward to applying to your charts on the Monday. So just to let you know, guys, if you're enjoying the content, I would really appreciate your like. Please subscribe, turn on notifications to get my future videos. So what we're going to do today is just take a look at a few different market structures just to help you in the mornings when you're planning your watch list or the night before you start to prepare for the next morning. And this is just going to really help you to identify what you could be looking for, what structure the market is in, if we're looking at a sideways, up or down structured market, and whether you're planning a trade on this pair or not, or letting it go. So the first pair we'll take a look at is here. This is gold. Not too many opportunities this week. We did have a nice bounce from in and around these levels here, around 1509, and we had a nice bounce from these levels here around 1490. So what I want you guys to identify, and ladies, is when price action is showing signs we're bouncing from ceiling to floor, from ceiling to floor, we can clearly identify this as a ranging market, meaning the market is moving sideways. For that reason, there's only really one criteria that you're looking for here if you're planning to trade a range. You want to be making sure prices come in at the highest points so you can have a safe stop loss above structure, and at the lowest points so you can have a safe stop loss below structure again. So if you go to your charts in the morning and you're planning your watch list, the way you can avoid taking premature trades on gold or this kind of structure is identifying right now that price has not come to a major level in the market to look for any potential sell opportunities or any major structural lows to look for buy opportunities. This is one structure that you really want to avoid trading while price is currently in the middle of nowhere. This is how I look at this structure. So in the morning when I come to the charts, let's move it. Let's say we type in gold, we come down and we see this chart. The first thing I say to myself is, where's my major highs? Right, let's account for these wicks here. Where's my major lows? Right, let me count for these wicks here. Where's price action? In the middle of nowhere. Do I care if it's making higher highs, higher lows? Nope. What do I need price action to do? Come back to this major level, or clearly a clean break of this structure and a retest, or a clean break of the structure and a retest. That means that nothing's going to be traded on gold until this happens. And what I'll simply do is add an alert, Bob's your uncle. Okay? Structure number one, do not trade ranges while price is in the middle of them. Or was that supposed to be tip number one? Who cares? Next pair, US oil. Now, I want you to identify this price action. This doesn't happen a lot in terms of huge moves to the upside, but it does happen when there is news, okay? So what I want you to identify is when price action has been impacted by huge or high impact news, should I say, what you'll find is the range of the candles will be clearly bigger than the candles to the left. That means price action has extended itself. What you now need to allow for price action to do is give you evidence that the buy pressure or the sell pressure is depletion in the market. You need to allow for price action to move in its directional bias, and you need price action to pull back to start showing new levels. Once this price action is done now, this can potentially indicate to you a sell buy structure, and what you'll be then doing once you identify this is you will be marking your levels to see where you can take trades. This is a potential level in the market where price could react to. Does not mean we're going to sell it immediately, because obviously you need a strategy and plan in place, but this is where we could look for potential continuations with this sell buy structure. Then next, you will mark your lows of this area, and again, you see what we see? We see right now that where price could find issues or bounce off if you try to sell now or buy now is these areas here. So what are we doing? We're just allowing for price to come back to these levels to look for sells, back to the downside, these levels for buys or clear breaks and retests of either structure. Is this tradable today? Absolutely not. We are waiting very, very patiently. Okay. Now, this is an overextended market structure. We allow for the correction. If we find major levels on the market where price is reacting to, we suspect that price is going to continue up. And then once you get your structural higher lows or your formations, your double bottoms, your breakouts, whatever it's you're looking for, you can look for buys. I would not prematurely look for buys until price is giving you enough evidence and confirmation to take these trades. Secondly, if price does not make a new structural high or attempt to push up to make the higher high, then what you need to figure out is what is price doing now. And clearly, this is not tradable today. Okay? So tip on this one, with an overextended market, always allow for correction, always wait for evidence and confirmation of a continued bullish movement from news-inflicted movement, or allow for price action to give you clear evidence at major levels, or wait patiently for your breakouts of either structure to the high or low. Tip number 2, tip number 3. This is a very, very simple chart to look at. This is what I want you to do in the mornings. Look at the chart and say to yourself, this means you are looking for sells only. What are you looking to do? Figure out the phase of the market. Because the price broke previous structural lows, this means this market right now is in a push phase. How do you avoid taking premature sells now and finding yourself in drawdown or potentially being stopped out? Well, what you're going to do is wait for price to exhaust, show signs of evidence, look for tradable opportunities, or allow for price to come back to strong major levels in the market. So you're looking at this structure in the morning as such. This is a sell bias market. I would allow for price to come back to this major level for my highest probable sell opportunities, or I'm going to wait for price to clearly pull back to give me evidence that it's failing to push higher, and then I could potentially look for my breakouts, my retests, my double tops of structures, my lower high formations, and whatever else you trade. Okay. Tip number 3, these are the structures you want to trade. When the market is down, showing clear lower lows, lower highs, you can now start looking for your major areas on the market. And just to be safe, rather than sorry, it is always advisable that you allow for price to come back to major levels, or wait for your price to pull back to show signs of failing to push up, and then look for your double tops for your sell opportunities. If price starts to push up, creating higher lows, and starts to break and violate structure, then you know the reversal is probably in play. Okay? Tip number 3, wait for clean price action. Final one, pound, New Zealand dollar. Forget about the pairs, but what I want you to identify is that this market structure is clearly up. However, the difference with this structure and structure number 3 is that there's no clear levels to be working with. We could force them, and if we start to force them because we're just looking for wicks, you're going to find that you're going to clog your charts up with too much riffraff. What I need you to do is I need you to identify that even though the structure is clearly up and we would be looking for buys, if we cannot find any levels that really are working for us, and we find that we're drawing too many to look for levels to come back to, then what that's going to do for you, or unfortunately have an adverse effect on you, is create a false expectation that price is going to bounce from any of these levels that you suspect it to do. So tip number 3, if price action is not creating clear higher highs, higher lows, and you do not have structure to place your key levels at, then guess what? Do not trade it. So guys, I hope you enjoyed it. A few tips and tricks for you to utilize moving forward as of next week, simplifying your trading to the most simplest form. I hope it works. Leave some comments, give me a like, turn on those notifications, and let me know down below what you want to see next. Take care.